it's just a constant reminder that oftentimes you don't really focus on the journey of the founder, which is it's incredibly difficult. And so that for me, it was just an inspiration. It's this vertical integration that captures value and recycles that value constantly to run this playbook over and over and over. I think the telco dynamics matter from market to market. Also, I mean, look, most people bucket Latin America as they bucket Africa, to have boots on the ground and to be very close to the user.
Hello, everybody. Welcome to another episode of Frontera, the podcast where we analyze what's happening in the crypto ecosystem in Latin America. I'm Ab, co-founder and CEO of Espacio Crypto and Bando. I'm with my good friend, as always, Kush, founder of Odisea. And today we have a really special guest. We have Santi from Inversion Capital. We've been chatting with Santi for maybe 6 months or so. We invited him to a podcast in Espacio Crypto in Spanish. And now we're doing this because, Santi, you're launching Inversion. You announced that the focus is Latin America. So welcome to Frontera. How's everything, man?
Great. No, really exciting. Thanks for having me. So definitely, yes, our primary angle focus is Latin America. Not just Latin America, but we think that Latin America is prime market for stablecoin adoption, as well as the playbook that we intend to do with telco.
Amazing. Santi, I'd like to start knowing a little bit about your journey. I think that, well, you have Empire, you talk every week about basically what you've built, but I'm a big listener of Empire, so thank you for producing that. And I've seen your evolution. Maybe 1 year ago, you always talked about how you were an investor and how you looked at deals and how you looked at founders. And I think that from 1 year to today, you've been talking a lot more on your evolution to becoming a founder. So I'd like to know a little bit on what changed. Why from VC now you are a founder and you are starting Inversion?
Well, the key insight is that nothing changes. When you think about the skill set that you need to have for early stage investing and building is no different. And that is the biggest scam that I was sold on throughout my career, which is that being an investor is not being a builder. And I would disagree now, because fundamentally what you're looking at and your role as an investor as it is for a builder, particularly in early stages, to identify talent and to really understand if whoever you're going to invest in, either your time or your capital, doesn't matter, is the right person. And more so if you're a true value-added partner from an investing standpoint, no different than a founder, which is your role is to inspire people to rise to the occasion and to be the best version of themselves. And so it's the same skill set. So it's just an insight from my side, which was, this is no different. So historically, it would have second guessed or discounted my ability to be a founder. But as I look back throughout my career, and a lot of it was just listening to founders podcasts, which was instrumental in just understanding the evolution of every founder. It's almost like to come to the realization that, yes, I can be a builder, and it is not too dissimilar from being an investor. There are, of course, nuances around that, but I could tell you it's more fun being a builder in this capacity. I think it's just more day-to-day interaction and meaning that I found. I still love investing. A lot of what we're doing at Inversion has a very specific investing mandate and focus. And so it's kind of the best of both worlds, where I get to identify and recruit the top talent that I can find to run this playbook, but being more and more involved in day-to-day. And so, it's more of, for all intents and purposes, it was also looking back at my career and saying, well, at Parify, we were building and we hired a team. We went from 0 to 1. We were early in DeFi. All of that involves the same sort of skill set that is required to build a company. At the end of the day, I think if you look at what is the common denominator across industries, across stages for any sort of manager, leader, is just, inspiring smarter people to join the organization, and then making sure that those people, you never give them a reason to leave, A, and B, more importantly, you give them a platform to get, to really put their career on hyperdrive and never ever give them a reason to leave. It's just, this is the place where you get the most out of A+ talent.
Yeah, man. You talk a lot about the Founders podcast, and I'm also a big listener of it. I just want to talk a little bit about 2 seconds about it. Um, do you remember any episode that made you change your mind?
Well, I vividly remember it was like August, September. I sort of was traversing throughout Asia, going like Token 2049. Before that, Korea Blockchain Week, and I think I was just bored out of my mind and listened to like 200 hours of Founders episodes, and I was like, all right, there is this common denominator across founders in their journey, which I think David, the host of Founders, really does an excellent job of dissecting the evolution of founders, because most of the time, at a very cursory high level view, you just look at the success stories. But you listen to the podcast of Michael Jordan, or you listen to the podcast of Steve Jobs, or Yves Saint Laurent, or Chanel, or Napoleon, um, uh, Bill Gates. Pretty much like every founder, like the journey of the founder is not straight line. There's a lot of luck in the equation, but there is sort of these near death traumatic experiences where like the company was like this close to going bankrupt, or had A or B not happen, had this person not met this other person at the elevator, the company would have been bankrupt. If Amazon hadn't raised, right before the dot-com crash bubble burst, like they probably would have gone under. And so it's just a constant reminder that oftentimes you don't really focus on the journey of the founder, which is it's incredibly difficult. And so that for me, it was just an inspiration of saying, listen, like, it's just important to realize that every founder is at the end of the day human. I think maybe some aliens, but most of them are human, and they all kind of go through the same struggles. And it's just, of course, you need to have skill. You need to, I think, have like a very unique edge that I constantly think about, in the same way that you think about investing, right? You always want to, I guess, from my standpoint, do things where you feel like you have an edge, an unfair advantage, because the odds are really stacked against you. And so I think it's just a constant reminder that David from Founders does an excellent job of like documenting that, because I think it's lost. Most people say, oh, Zuckerberg, like he was at Harvard, the stars aligned. I'm like, no, wait a minute. There were like hundreds of other social media networks at the time. Google guys, like there was Ask Jeeves and Yahoo, and there was countless of others before that. Bitcoin wasn't the first. It was like colored coin. So like, it's just an important, we sort of lose these like important moments of the journey of any company, especially even the more successful ones. Of course, it's like sort of like a selection bias. You only see the most successful companies, and then you forget or don't care to look at the entire evolution of that founder and that company. Oh, and by the way, the success of a particular company is not all entirely tied to one person. So it's just really, I think that David's main mission is to really document that. And I think he does an excellent job. Warren Buffett, you hear him say, like, the best way to learn is from the mistakes of others. And the best way to do that is to go read biographies and autobiographies, because, there's a lot out there that we can learn from prior founders and companies, both successful and unsuccessful.
Totally. And I think as an investor, you sort of are able to spread a number of different bets and actually sort of accelerate and speed run a lot of sort of observations around failures of what makes companies successful and not, right? And be able to leverage that for inversion. Speaking of inversions and playbooks, I mean, I'd love to sort of, for you to give us, for the audience that isn't familiar, run us through the inversion playbook, how did it come to be, what's the thesis behind inversion, and sort of the evolution of the idea as well, right? I think there's a very interesting sort of arc there behind inversion. So run us through that, and we'll dive into LatAm as well as we weave that in.
Yeah, I'll be as quick as possible. If I can't get your audience excited in 2 minutes, I would have done something terribly wrong. The idea for inversion is predicated on one very specific concept, which is we have a broken onboarding funnel in this industry. It is unrealistic to assume that we're going to onboard 1 billion users through an exchange. Why? Because you can't sell to normal people a stablecoin or a core service that is powered by crypto through an exchange, which is only tapping into a very limited audience that wants to speculate. And the analogy to that is, how many people go to the casino? And of that percentage, small percentage of the population, how many of them bring their life savings to the casino? Hopefully the number is very small. And so I think we can't, if you invert, you say, okay, why is it that we don't have 1 billion users on chain? Well, concretely, why don't we have 1 billion users using stablecoins? And I say stablecoins because that's like a 0 to 1, like Trojan horse email moment of this industry where it is unequivocally like a incredible product. Most of the world wants access to dollars. They can't have that today. And that is a bit lost on people that live in developed countries. But like, think about the euro dollar. It's called the euro dollar because it was just like dollars sitting, in a foreign reserves or banks. But that's a very limited. Most of the world wants access to dollars, but it's still very hard to come by. Stablecoins are that, right? And so you start thinking about, okay, why is that? And you come to this conclusion: we have fundamentally a broken funnel. So again, what do we do about it? I think that the timing is very correct because we have enough proof points that we've built infrastructure that can support users. Go look at high throughput blockchains like Solana, or Avalanche, or some of the L2s. Like there's excess block space, not enough demand for it. And that is very, I think, true in this moment in time. And we have good products. We have deep in projects like Helium that, will sell you a mobile plan that is pound for pound equally or better than a competitor. And stablecoins, right, that are, dollar denominated, high yielding savings and money market accounts tied in one. Like the programmability and global nature of it, instant settlement, is super powerful. And so inversion is attempting to fix that onboarding funnel problem. How do we do that? We run a private equity playbook where we go and buy traditional businesses where we feel that we can replace infrastructure and cut costs in a very meaningful way. And then we onboard that massive user base of the companies that we acquire in a crypto. And when I say onboarding, it's really just crypto is very much invisible. It is, again, we become their bank. We offer them the ability to have dollars in a wallet, call it a bank account. And so that's how I think we onboard 1 billion users to the space. That's why I want to build inversion, because when you compare what the crypto industry is doing, is you're trying to build distribution, meaning you're trying to go and convince people to use your product and service. And maybe you lead with a decentralization, super important, some sort of philosophical construct that candidly doesn't resonate, or most users don't care. And so building distribution is very hard, expensive, and time consuming. I never want to build distribution. I want to acquire it at the best price possible. And so in that sort of framework and exercise, you say, okay, which businesses can we cut costs by ripping and replacing infrastructure, swapping old tech with crypto rails. And so there's very discrete number of industries where we feel like we can do that very, very well today. And then you say, okay, how do I then activate those users to start using more products and services that are powered by crypto? Like crypto enabled is a word that I'm going to be using in this podcast. It's not a crypto product. I think we should stop calling everything that we build in this industry as a crypto product. It's crypto enabled. In the same way that, like, newspapers became tech enabled, media companies or any company became tech enabled. Everyone started to use the internet 20 years ago. And so I think that evolution is very core to how we think we're going to build value and inversion. So in summary, we're not going to build distribution. We're going to acquire it. We're going to acquire businesses that have large user bases where we can cut costs. And why cutting costs? Because you can control costs. You can't control top line growth or multiple expansion or whatever. You can always control costs. And crypto, at the end of the day, is infrastructure that allows us to break free from systemic friction, payment processing fees, chargeback, hardware, CapEx investments, capital intensive industries, right? And so those are the businesses that we're going to acquire. And those businesses have large user bases that will really appreciate being served a product that they candidly never have access to before. You both guys traffic in Latin America. Most people don't appreciate that everyone wants to hold dollars. They just can't do it in their traditional bank accounts. Most of them are underbanked anyways. What is it, like 40% of all Mexicans are underbanked?
Yeah.
And it's a unit economic problem. It's not that traditional banks don't want to service these customers. Like Nubank sort of came to this realization, which is, one of the most successful fintechs and probably ever, which, backed by Warren Buffett, 100 million users, started in Brazil. They started giving users a credit card with like $1 credit line. And it was just predicated on a simple idea, which is the traditional banks are very antiquated. It's not that they don't want to serve these users. It's just that it's not economical for them because it's a technology problem. It's not like I don't want to service like bottom of the pyramid. It's just that their systems are so antiquated that it's not economically viable to serve these users. And so crypto at the end of the day is that type of technology that allows us to, it's easy to serve a customer. It is easy to onboard them. It is easy to serve them a stable coin. And the LTV of that user becomes really interesting. And so anyways, I think that that's really the potential that we see. And so now I appreciate that I've been going on for more than 3 minutes. So maybe I've done something terribly wrong.
Dude, I think that something that resonates a lot is that you were born and raised in Mexico. Well, I don't know if you were born in Mexico, but you were raised in Mexico. So you understand that and you've seen these challenges. And Kush and I were at ETH Denver. We were going to Meow Wolf and we were just like talking about the day. And we were discussing how we had a bunch of conversations with people about stablecoins that day. And we came to this realization that most of people in like developed markets do not understand this. The thing that you say, stablecoins, forget about stablecoins. The dollar as an asset has infinite demand in emerging markets. And that's a fact. And when you think about infinite demand, then you think on why hasn't it been fulfilled? It's because of that thing that you say, like the last mile problem of if a fintech company launches a stablecoin wallet, they need to acquire millions of users to get to mass, right? And the thing that you were saying about stablecoins and crypto and the approach of crypto in the backend, I really like it because it reminds me a lot about how encryption in the 90s they wanted to ban it. Like the Congress in the US wanted to ban like private encryption and all of that. And today there are more than 3 billion users in WhatsApp using like pretty advanced encryption. But my grandfather doesn't care about it. When I ask about what's WhatsApp, he says, I don't know, I use it to send memes. He doesn't care about end-to-end encryption. So inputting crypto into the user in the backend, I think it's is the best way to do it. And I'd like to chat about, you've talked a lot about MVNOs. These are mobile virtual network operators. So basically, for people that don't know, are companies that rely on third-party infrastructure to provide telco services.
Right.
The most famous MVNO was Ryan Reynolds. I think that he sold that to T-Mobile or like $1 billion acquisition.
Yeah.
And studying your playbook, Santi, I think it's pretty compelling. Buying one of these mobile network operators, they have millions of users, and these users also, people in developed markets, I think, that don't understand what a mobile top-up is. And sometimes that's like surprising. I've chatted with a bunch of investors and I tell them, do you know what a mobile top-up is? And they don't know because in the developed market, they do like prepaid plans. But a couple of data points. We've been interviewing a lot of users in Bando, and it was even surprising for me that talking to users, they do mobile top-ups every day. Yep. And you see that pattern. So they need to go to a product to do something that it's like a basic need connecting to the internet, and they go to that product every day, regardless of if it's crypto or whatever, right? Another important data point for people listening to us, the biggest bank in Mexico, BBVA, they have the feature of doing mobile top-ups in their mobile app. And doing market research, one friend told me that the third most used feature in BBVA is mobile top-ups. The first one is checking balances. The second one is like a peer-to-peer transaction using SPAY. The third one is mobile top-up. So when you match infinite demand for dollars versus this huge product that has millions of users that can come every day, your playbook starts making a lot of sense. So apart from everything that I said, I'd love to hear more about the MVNO play. So
Yeah.
basically converting this app into a wallet. And how are you doing that with inversion and with a blockchain specifically?
Yeah, great question and good data points. That's sort of the prompt, which is what platform business with many users that is core and essential can I buy the best price possible? And I'll say it again. What platform business with a lot of users can I buy that serves as that platform to activate users into crypto at the best price possible? Right? Because in this journey, talking to investors, they're like, oh, go buy a fintech company. I'm like, why would I do that? And they're like, it's a great product. You know, fintechs are going to take over the world and you're going to create the next new bank. I'm like, yeah, but what multiple I'm going to pay for that business? 15 times, 20 times? I'm like, I have no interest in buying that. That's a high customer acquisition cost. What multiple can I buy an MVNO for? 3.5 times EBITDA. And you see that's, as an investor, the price you pay dictates the outcome that you get. And so you can buy a terrible asset at a great price and make a fantastic return. And conversely, you can buy a great asset at a terrible price and that be a terrible return, meaning you would have bought NVIDIA at the top. Yeah, you got crushed or have gotten crushed. And so I really take that to heart. And so MVNOs, why are they good? Why are they good businesses and why are they great businesses in Latin America? Something you mentioned about prepaids, which is when I talk to a lot of people in the US, I ask them, when's the last time you logged in or used the app of your mobile carrier? AT&T, Verizon, T-Mobile, Sprint. They're like, can't remember the last time I did that. I'm like, why? Because you're a subscriber. You swipe your credit card, you set it and forget it. Maybe when you traveled internationally to, you know, create a eSIM or a roaming plan. That's not the case in Latin America, where most users are not subscribers. And that has two benefits. One, the multiple on a non-subscriber is lower than a subscriber. You talk about Ryan Reynolds Mint, a lot of them are subscribers. You're paying $100, $200, $300 per subscriber if you wanted to buy Ryan Reynolds company. In a place like Latin America, where most MVNOs don't have subscribers, just have, you know, these transacting users that are on a prepaid plan, meaning pay as you go, the multiple is much lower. So again, the price is really interesting for this reason. So normally an acquirer or someone that's looking at this business might say, wait a minute, all this sounds great, but there's a lot of churn, meaning these users may not stick around. They're hopping around different plans from Telcel to Movistar to Freedom Pop and then the next MVNO, because there's a lot of incentives and it's super easy to do the SIM portability. And you're like, you're absolutely right. Yeah, there is a high churn. Again, I like that because something you mentioned, which is these users that are not subscribers are constantly interacting with a wallet or constantly topping up the data. And so when you want to activate and upsell that customer to a new product, it is better to insert yourself in their flow day to day versus trying to convince them to go out of their way. The worst investments you can make is to assume that you're going to change consumer behavior. You never, very rarely do. Are you like, what companies have changed consumer behavior? I can think of very few ones. Categorically, the internet like really transformed it. Social media took a long time for that to happen. Apple.
Yeah, like maybe
they launched a
Apple,
smartphone.
Ford.
Smartphones radically change consumer behavior. I'm not building a smartphone here. I'm not building a rocket. I'm stitching together core infrastructure to then sell something to a user that I know already want. Steve Jobs, when he designed the iPad, fundamentally created a new product category. That is so hard to do. I don't think I'm that creative genius. So what do? I'd rather just tell the user, oh, if you're checking your telco app, 5 times a month or daily, well, I think the probability of converting that user that he sees a pop-up screen that says, hey, listen, open a bank account. Here's $10. If you deposit, $1, we'll give you 10. Create a bank account. Oh, by the way, it's $1 denominated bank account. I can underwrite a thesis behind that because predicated on 2 ideas. One, there are a lot of touch points with that user in a core service that they're continuously going to use. And second, they very much want dollars. And you're serving them a product that they very much want but don't have access to. Coincidentally, that fixes the main problem of the business you just acquired, which is churn. Yes, a lot of these users are leaving, but they're going to leave to a lesser rate because they're going to stick around, because you're going to maybe offer them a lower price on mobile because you're making way more money by becoming their bank. And so I actually don't love telco as a standalone product. My thesis is that telcos become so much more, and they can pretend to be telco attached to another product or service becomes really interesting because you learn more about the customer. You live with them 24/7. It becomes a loyalty program of sorts. Companies that have already done this, Walmart in Mexico launched their own MVNO called Bait. Bait is now the largest MVNO in Mexico. It has 14% market share in 2 years' time. They use Bait as a loyalty program. They learn more about their user as soon as they leave the store. They offer them data incentives, data plan incentives, if they buy more in the store. The real moneymaker for Walmart is the volume and purchases in the store. They don't care about mobile. In fact, I don't think they're making much money on mobile. They're making way more money on the users that buy the MVNO and use that as a loyalty program to drive more volume to the store. So you start seeing Nubank already has the fintech that I described earlier, the Brazilian fintech that operates in a couple of places in Latin America, also launch your own MVNO. And the activity rate, which is a KPI that they measure, which is the active usage, how many times, they have total users, and then, what percentage of them are active, has gone up as they launch the MVNO and the travel booking site. Fundamentally, any company, no matter what sector you're on, if you're serving a consumer, you're in the attention game. I think anyone listening here that is in crypto appreciates how important attention is. Attention is only becoming harder and harder to capture because there is just so many different possibilities and apps, and competing for attention becomes hard. But I take the position that if I'm serving a customer a core service called mobile that I don't think is going to go away anytime soon, I'm in a better position to capture their attention. And I love it because I can buy an MVNO with 20, 30, 40, 50 million subscribers for a really interesting price. Now, the second part of this equation is I'm going to bring all that stablecoin usage and activity to my chain. And we haven't talked about that, but I'll pause because this is why is this not a fund? Because I have no interest in ever selling these businesses. I always want to own these businesses because that's the funnel that I talked about. That is how we onboard 1 billion users. I buy more and more MVNOs. I convert that MVNO into a bank. And then I become their mobile carrier and their bank. And I become the largest fintech and mobile app in Latin America. And that's a $100-200 billion business. And then I have a chain where I settle all the economic activity. And so then I become the largest chain. And so I become larger than Ethereum. Heck, I become larger than Bitcoin.
I'm really excited to dive into the chain side of the house as well, Santi. Before doing that, I think a couple of analogies that come to mind for me, right? So I use Revolut, for example. And in Revolut, I've got insurance. I've got a mobile MVNO. I've got, I could book things on Revolut. I can book hotel stays. There's sort of these loyalty programs, right? So, but the problem is you can't necessarily roll out, it took Nubank they launched 2015, 2016, right? It's taken them a decade to get to 100 plus million users, right? And so, and as we know, due to sort of archaic regulations in Latin America, rolling out a financial infrastructure sort of application in the region is actually quite tough, right? So going the MVNO route where, regulations are generally a little bit more lenient, and then being able to embed sort of all these new financial primitives into it, and stablecoins and payments and lending markets and so forth as well, I think is really wise. I was curious now to also start thinking about how you think about the chain, right? And where that piece comes into play, because we've heard you talk about this L1 that you're looking to launch as well. And, I think that the other thesis that also really resonates is the number of people that are going to go to a casino and speculate is relatively limited, right? Yes, a lot of people will be driven by that greed, but I think ultimately there are way more cell phone users than casino goers. So let's dive into sort of the thought process behind the chain, why that makes sense, how you think about onboarding capital onto the chain via this MVNO and this much more integrated product that you're looking to launch as well.
It all comes down to what we're trying to solve for here, which is be in a position where we can continuously buy more and more businesses. And we call it inversion in the classical sense. You hear Charlie Munger, which is Berkshire Hathaway and one of the greatest investors of all time. He'd always say, invert, always invert. And so Berkshire Hathaway is a really interesting structure because it is a holdco vehicle where they have been able to express and buy positions, large positions in companies that they really like, and be really patient capital, meaning If you're a traditional venture private equity fund, you're investing over a 5-year period, and then you hope to return capital to your LPs. And I think that's a very tough position to be in because, certainly you can be successful, but I think the holy grail here is to have a longer term investment horizon where, again, I never want to distract my strategy and ability to execute on it because I need to sell a company because my investors want their money back. So again, how do we do that? And really learning from other what are called permanent capital vehicles. You do this by launching a chain. And so launching a chain has two benefits. One, you're not leaking value. If we're going to do all this work. Our primary focus is buying company, proving that you can make a company extremely efficient with crypto rails. No one's ever done that. And then you transform these businesses into grow their margin profile, monetize that user, everything we've talked about so far. The second part of the equation is bringing those users that are using a stablecoin. Well, you need to settle all that activity to some chain. And so the realization that we had is, why would we go out and do all this work, own the user relationship, and then leak that value via settlement and MEV, transaction fees, on and off ramp fees, swap fees to a chain or another app? And I think it's this vertical integration that is important because we capture value at the company level, but also at the chain level. And the chain, the treasury of the chain becomes that currency that we use to go and buy more businesses, or be at least in a position to buy larger and more, businesses and run this playbook without being tied to or be constrained by, hey, are there investors out there that want to invest in this thing? Can you raise a fund? Do you have to go and talk to LPs or create SPVs or all this stuff that we just want to minimize that dependency? We can still tap into SPVs, we can still tap into other investors, but again, running it as a chain allows us to have that treasury to use as acquisition currency. And just to give you some perspective, so like Ethereum, for instance, the Ethereum Foundation is spending hundreds of millions of dollars. They're not running this playbook, and I fundamentally don't understand why. Because it's Solana, for instance, Aptos, all these different L1s, L2s have large war chests that they should be using really strategically to go and acquire and solve their biggest problem, which is onboarding more users, right? But they're not doing it. I went to them, I talked to most of them, and they either are like, hey, we're investing in the community, we're giving grants, developers, but there's a lot of unproductive capital sitting in these foundations that I take the position again that we can do so much more of that. And the analogy here is, you take AOL, the peak of .com bubble, went and bought Time Warner, a far larger business, and they use their inflated stock to grow into their valuation and buy a real business. I don't know about you guys, but I don't think we can justify the valuation of any of these networks based on a stream of 10-year cash flow. More so, a lot of these valuations are tied to pure speculative activity. Like if you look at, you say, wait a minute, well, let's value these chains. How are you going to value them? Okay, let's value them in a classical sense on cash flows. Okay, well, what are those cash flows? There are settlement fees, which are very small, especially high throughput chains. And then there's MEV, right? Which is you have this competition for block space, and you're either tipping a validator, you're competing there's a certain level of activity that requires fast settlement and execution, and so you will pay a premium for that. Right, fine. The problem is if everything's tied to speculation, meaning meme coin trading, well, that ebbs and flows, right? That is extremely cyclical and volatile based on price assets and money supply and macro and stuff. And again, I think the goal for us, if we think about what is the main KPI for our chain, the inversion chain, is bringing a user that has never existed on chain, meaning a user that doesn't care if Bitcoin's at 100K or 20K, because he is not coming to the casino. He is being served the core service called mobile and banking. And so that user actually never sees or knows or cares to understand that the services that they're being provided are powered, again, crypto enabled. And second is the diversity of our of the chain cash flow is anchored to real businesses that we acquire and own. And more importantly, kind of breaks from the self-referential problem that we've had in crypto, which is everything is pure speculation right now. Most things are pure speculation. And so I think if we really want to grow up as an industry, we need to kind of, I think that this is the best way to do it. Now, you could take the position like Carlota Perez, which is a great book, like Technological Revolutions, which says, it takes a long time for technology to permeate into the mainstream, like, 12 years or so. And look, we've been on a 10-year journey plus to build core infrastructure of high throughput blockchains where you can, credibly say, hey, we can support another 100, 200, 300, maybe a billion users. But I just don't want to wait another 12 years. I don't think we have 12 years. And the most exciting thing is we can do this today. Like success for us is to, again, prove to the world that you can buy real businesses and transform them, meaning grow their margins and double their margins in a very meaningful way, maybe even more impact than what AI can deliver to the P&L without that much CapEx investment. And then if we do that, then we allow these companies to just open up new business lines and monetize their user base in a very interesting way. And so I think, I don't know if that fully answered your question, but I hope to really tie it all together. It's this vertical integration that captures value and recycles that value constantly to run this playbook over and over and over, because we'll have what we think is, said differently, if we become the largest chain by number of users, maybe by doing 1 or 2 acquisitions, and we can prove the playbook of transforming that business and activating that user to come to our chain without thinking or leaving, more importantly, because crypto prices are volatile and do their thing, then we brought a user to the crypto economy that has never existed before. A user that is using crypto products and services, and the LTV of that user is really high. Because most users today, so for instance, take the Trump meme coin event. Everyone gets excited because, first of all, super crazy of a timeline that a president launches a meme coin. It tells you everything you need to know about the state of affairs and regulation and how this industry has grown up. More importantly, the infrastructure, being able to withstand that amount of activity over a weekend, it was 20-30% of all the NASDAQ volume happening on a weekend. That tells you that the tech is very much ready. But then this is where the problem starts to show up, which is most of those users are not sticking around because they buy a coin that does that. And the volatility of crypto prices is very traumatic and is provoking churn. And I think that's a problem, right? You can't last all day in the casino. You're either going to be served too many drinks by the casino, you're going to become incredibly drunk, or lose all your money. And that happens in crypto time and time again. And so I come up from a world of investing in enterprise software. And the most important KPI there is, what is the LTV to CAC? The CAC is really high in crypto because we throw airdrops and crazy amount of free money to users, but they're not sticking around. They're not sticking around because all they do is they speculate on prices, and very few, the odds are very stacked against you. The longer you spend time in the casino, the more likely it is that you're going to lose all your money. And so I think we just got to invert that and bring users to, it's said differently. If people go to Vegas, you're not going to sell them, life insurance products when they step into the casino. You're not going to sell them, a safe bond, an annuity or life insurance policy, or it's just unrealistic. They're not in that mindset.
Yeah. No, and I think, the Trump meme coin was a massive onboarding event, and data shows that it was 90% of new wallets created just left the ecosystem and never came back, right? I would 100% do that too, right? And so it just makes sense that we do have to shift away from these speculative games, and just the incentives within this industry are totally skewed towards narratives and hype without actually driving a lot of real utility and value. And part of the intention with this podcast is to communicate and talk a lot about, okay, where crypto has high PMF in regions such as Latin America, what are the products that we should be building that do derive and give people sort of meaningful impacts in their lives, right? And so whether this is inflation, cross-border payments, financial services, right? A few different examples. Like I tried going to a bank in my home country in Latin America and getting a loan out, and sort of the APY was 20%, right? They didn't even tell me what the interest rate was. They were like, oh yeah, it's 20%, right? And then I went to Liquidity, took out a 0.5 interest percent loan, and made a complete breakdown and comparison between like, hey, this is why DeFi matters, right? And so, but it just that whole experience was also a pain, right? And I had to off ramp, and I had to swap, and I had to L1, and it was super complicated. So being able to abstract away a lot of this complexity, which I'm really excited for you to be able to do, with this L1 as well, and think about how you offer this very seamless service on the application that you'll be launching and leveraging too. It will be exciting. One thing, what are the services that you think, so after cell phone access and having access to data and so forth, what are the other services that you think would have and would allow you to be able to vertically integrate into sort of your rollouts as well, and the other businesses that you're excited for in the region?
Yeah, look, excellent question. There are very specific services that I think are core to any user, and that is mobile, and then it's becoming their bank. It starts with delivering them the ability to have dollars in a bank account. So receiving remittance flows. Remittances, Mexico, US is one of the largest remittance corridors in the world. Mexico, US, Latin America is definitely regionally the largest. So again, like offering that user, you go to them and say, listen, through this wallet, you're going to be able to receive the dollars that are your family members in the US sent to locally to you, as opposed to paying 9%, 4%, 4.5% processing fee, and then FX. You're going to get the 99 or plus of that flow. So that's again a very compelling, like tapping into remittance and that volume, massive volume, is really compelling because the user benefits, because you're not charging them that crazy amount that a Western Union does. So they win on remittance flows. They win on having the ability to hold dollars and earn interest on those stablecoins. Like again, they're programmable, right? So USDC will offer you 4.5 or 5%. Or whatever other stablecoin you're looking to offer through the wallet. Then it becomes interesting because you can extend them a credit card, you can extend them credit as a whole. And there's an important piece of why mobile is such an interesting business, because you already have all those users KYC. In order to have a SIM, you need to have provided key information that is important to focus on fraud and money laundering and all this stuff that becomes important to be compliant with a regulator. And so it solves the Sybil resistance problem in crypto in a very meaningful way. And so, but also you have so much history about that user that you've been servicing a mobile product. They've been, you can underwrite credit and extend credit to that user because you have a far more interesting risk profile and assessment of that user. So you can start extending credit. So there's still like some friction. I don't want to minimize it. There's a couple of things that need to be solved that we're really focused on at Immersion, which is stitching together mobile and fintech in one product. What does that experience feel and look at the wallet level, where it is very seamless for the user that is on mobile to then say, okay, it's the same wallet look and feel, but now all of a sudden I have this added functionality where I can receive money from remittance flows, but I also can just keep that money and store it in dollars, not local currency. Now you go further and says the on and off ramp still has some friction in crypto. So I don't mean to dismiss, like we still have some issues to fix, right? Which is it's still 1 or 2% on ramping and off ramping fees. So again, in the classical sense, maybe we're not going to be able to solve that. So what do? We invert and we say, okay, let's just focus on incentivizing that user so that they never leave. It's only one way, right? You receive money or you on ramp and you never take money out. If you want to take money out, we'll float you that money in local currency. So we'll extend you a loan in reals or pesos. And so that way you are earning more fees because you then become their lender, right? You offer them a credit card. The retention is greater because that user doesn't leave, right? And so all of a sudden, like I don't need to, offer this user 100 different products. I think, again, we're very focused on two very important core services that encompass many things, right? But mobile is a very simple product that everyone wants and uses. And then banking and the banking relationship that we have with a user obviously evolves and extends hopefully over time. And you grow that LTV, right? In the same way that, Nubank, and you become their, simplistically, one user archetype is just hold stablecoins, and that deposit base grows, right? You run a tether business model attached to that. You're earning net interest income on those deposits, and that's great. More importantly, you can then start layer on credit and other life insurance products, and loans for, just credit can facilitate many different use cases. That could be financing a home or a car or an appliance purchase, or other type of insurance products. So there's a reason why mobile carriers and banks are one of the largest companies in the world. And so we're very focused on those two verticals and pillars of core services that we offer the user. And as a region, Latin America is primed because of remittances, because we never want to operate in regions where we don't think we have an unfair advantage. I grew up there. I understand the market well. I think the telco dynamics matter from market to market. Also, look, most people bucket Latin America as they bucket Africa. Brazil is very different than Mexico, then it's very different than Peru, Colombia, Uruguay. Like, these users are different. They might be mostly Spanish-speaking countries, but the regulatory environment is different. The telco environment is different. The infrastructure that is deployed is different. The banking regulations are different. And so obviously we're mindful of that, and we're actively kind of navigating that. We very much plan to be boots on the ground. It's one of the things I've also learned in my career is you have to, if you want to build product, you have to go and meet the user where they are. You can't just start building product from New York and say, this is how a user in Monterrey or Zacatecas or whatever is going to want the stablecoins. Like, no, you got to go down there and build product, right? I draw a lot of inspiration from a company like Palantir, who built product by deploying engineers in the battlefield and saying, what are the main pain points that soldiers deployed in Afghanistan have? Like, you have to do that, because I do think that, look, I don't want to simplify the thesis or the playbook. Like, the execution is where all of this will either work or not. There are countless of fintechs in Latin America that have come to this thesis, come to this realization, are clamoring over, wow, there's 40% of all Mexicans are underbanked. We're going to go in there, we're going to acquire them, we're going to serve them core product. And that's not the reality of things. So again, a lot of this journey over the last 4 years since I left Parify has been really studying different business models, different companies, the local markets. I think, like, from a fundamental premise and principle, it's buy versus build, partner versus build as much as we can. More value, I think, will be created in crypto by stitching together stuff that's already been built than versus building de novo. Our chain is very much out of the box. It's supported by Avalanche, which is, again, a great partner of ours. And it allows us to build an EVM compatible high throughput blockchain with sovereign block space and low fees to support these users. I'm not going to build a chain from scratch. I don't ever want to build a chain from scratch. I'm not necessarily looking to launch my own stablecoin for now. I'd rather partner with Circle and use USDC because the regulator likes it, because it is actually a regulated stablecoin with the most amount of Lindy, So I think it's a lot of it is, when we go about and do a vertical integration, it is mostly just stitching together a lot of these Lego blocks and pieces, both in the traditional world and the crypto world, to produce the fundamental KPI here is delivering extreme value to the user in a way that is very seamless, frictionless, but very differentiated. And I think, and another premise that you hear me say throughout this podcast is it's crypto enabled, so it's invisible, and more importantly, it's we're very, very conscious of what is the cost to acquire these users at scale. What is that CAC? Because there's so many fintechs that it's easy to get to the first million users, but growing from 1 to 10 million and 10 to 100. Like, there's only one company in Latin America that's been able to do that. Like, one fintech that's able to break out, it's Nubank. And so I think there's a reason for that. They're very rare. They just build product like no other. And so I think it's just important we would rather acquire a business with a large user base at the right price that we feel we can activate and convert and upsell, versus going from scratch and trying to convince people and tell them that crypto is going to solve all their problems and decentralization is great. None of that works. I mean,
Yeah.
it can work, but it's not something that we want to do.
Yeah, definitely. Something that Kush and I always talk in Frontera is that necessity is a better driver of adoption than passion, because this industry is so passionate that we think that we're going to go with people and tell them, hey, decentralization is important, go into this stablecoin, and they really don't care. Something that it's really exciting for me about what you're building, Santi, is that abstracting the complexity of crypto, it's something that I've seen that it's worked a lot. When we were launching different products of stablecoins at Bitso, we decided to just rebrand stablecoins for digital dollars, and we saw an uptick on usage just because of that. And when you were talking about off-ramping, personally, I think that we should kill the term off-ramp and just use spending. Spending is the best way to off-ramp. Whenever you come to Mexico and you pay with your Chase card, you don't say, I'm off-ramping USD and on-ramping Mexican peso. You're basically just spending. And
Right.
Santi, I'd like to start closing the episode and talking about what do you need in Latin America today? Because basically you have access to the best investor network in the industry. Obviously, you have access to the best talent. What are the things that you are still missing, and that maybe is a request for X, whatever you need, and the community of Frontera can send you a DM or whatever. But what's the most important thing you need right now to make inversion happen in your playbook in Latin America?
Well, I appreciate that. We need a lot of help. I don't pretend to do this by myself. Again, my role is to bring people that are way smarter, more competent, knowledgeable than I am, I ever will be. And so people real on the ground expertise on these local markets. That is Mexico, Colombia, Argentina, Brazil. We need to we're looking to hire people locally in those markets that can do constant market intelligence, end up working in the portfolio companies that we acquire. But I think we're at that stage where we're really studying a lot of the market, and obviously we have a list of companies, MVNOs, that we're looking at to acquire. So we're doing a lot of work there. But I think if you've been part of a fintech or a company that has been reasonably successful in Latin America of solving hard consumer problems, and there's a lot of hard consumer problems in fintech, like Nubank or Rappi or Uber, I think that has required you to really understand how the entire financial apparatus organism works in the particular country, the regulatory landscape, the user, going to market and scaling. So these are all things that we're really focused on. And so, very much interested in hiring people in these markets. We're actually launching an internship program, particularly for folks that are younger or maybe in university and want to, get involved and help us do market intelligence and research constantly on the ground, because that really informs our product and how we build it. So we're going to hire at least an intern in each country, and we're going out to university clubs. But you have to be a resident of those countries, because if you need to you need to be a resident of that country to get a service like a bank account opened and an MVNO most of the time, right? You could be a foreigner, but you know what I mean? And so we're looking to hire people for the summer for that. And also just generally not just interns, but of course, full-time people that have really good, deep insight into these markets. I am raising around that round. I mean, I have a lot of really great investors that I've worked with over the years. But it also helps to bring on pools of capital in these particular markets that, have an interest and appetite in crypto, but also understand fintech really well, also understand telco really well. So I've been having more of those conversations. I don't need more crypto native capital. I feel like I'm very well rounded on that area. But if we're going to go and partner with a large convenience store or a large retailer or a family that has had experience and sold their fintech or their bank or their telco, well, those are people that I'm in the process of now talking to and getting to know. And they might move slow, they might not participate in this round, but those are the conversations that I'm really liking now, because they bring on a different dimension to this whole strategy that is really valuable.
And how can people reach out, man?
Well, we're on Telegram, and no, we're on Twitter, so people can go find us there, Inversion Cap, or they can just, find me on Twitter. That's where most of the time I'm very active. But we'll link we're going to launch our site soon, and people can just look at our job board and apply directly this way. But I think the best way to find us is we're active on every channel: LinkedIn, Twitter.
Cool.
And they can just reach out to us that way.
Nice. Santi,
most of
one
the
question. Oh, go for it.
Really in network, like my DMs are not open because I've learned that they are better not open. If part of this exercise is, can you get to us? If you're smart, we only want to find people that can find a way to get. It doesn't take that much of a higher intellectual firepower to get connected to us.
So Santi, if you were sort of, as you were thinking about launching Inversion, because I think about Latin America, and I think this will be just a nice way to start thinking about wrapping this up as well. It's like, what do you wish you knew about operating in Latin America? And if you were in the shoes of an external operator that has very limited scope into the region, what is something that you think everyone should know when it comes to operating in the region?
Again, something I said earlier, like Brazil is very different than Mexico. And very different than Colombia and Argentina. Like these are, and within these markets, like you really have to segment the market out. Like again, go study all the fintechs that have not worked. And I think a lot of why they haven't worked is because they really haven't been able to scale because they don't understand the user really well. They're very different users, they're very different pockets of users. And I think it's challenging. Like you can really blow through CAC and because you neglect the user. I think you just always constantly have to be there studying that user and delivering, iterating fast, moving fast. Like Nubank is that. I think it's just a fantastic company because like they constantly ship and are it just feels to me from the outside in that they're very, and I've talked to a few of their investors, they're just very, very aware and attentive to what the user and measuring what the user is doing and then informing product development that way. I think you can look at Sequoia, some of the large private equity funds, venture funds, like particularly Brazil is a very insular market. I think like in order to operate in Brazil, you have to find like a local player. Now, all this to say, David Vélez, the founder of Nubank, is Colombian and he went to Brazil. So like it's possible. You just have to go about it in a way where you have to have an edge, right? And an unfair advantage. And I think it pays to have boots on the ground and to be very close to the user. I mean, I think I'm saying things that are really fairly obvious, but I think sometimes like something you said, which is as a founder, I think we can be very opinionated to the borderline obsessed about a particular thing that we're building. At the end of the day, the way I like to go about product development and just building stuff as in investing, when I ask founders this question, I now really apply to my framework, which is, when I go either acquire something or build something, I have like a list of 100 people that have already committed to paying for the product. Or I've done experiments that require low capital to really de-risk it. Because what you don't want to do is what a lot of founders in crypto find themselves on, which is they built a phenomenal product, but no one cared about it. And it's not that no one cared about it, it's just hard to discover new things. It's hard to get users to do things that they've never done before, and I think this is a key insight that I had to inform really how I've gone about just inversion, which is in the classical sense of inverting is like what hasn't worked in crypto, and then let's do the opposite, which is let's not build from the ground up. Let's actually just acquire something that is reasonably really popular and then just, use that as an acquisition vehicle for users. Informed by this idea that crypto as an industry is very much ready and at an inflection point to onboard 100x more users and serve them good products and services. Like I think you brought on many guests here that talk about the values, the virtues of a lot of things in crypto. No one believes it outside in because we don't have traction and usage. And that's why I want to do this, because I just want to fundamentally tell people, hey, listen, this is not just a casino. Go look at the company that I acquired and go look at the users that are using stablecoins. Like they don't know it's a stablecoin. It's a program. It's a dollar denominated bank account. And I have 100 million people using that. Now tell me if crypto is just a casino. Like you can't refute that. You can't refute a mobile service that is powered by a decentralized network of hotspots that the user doesn't care about, but that data plan works and it's cheaper. Like it's crypto enabled. We're going to compete pound for pound because the products that I think that and I firmly believe the products that we can build and enabled by crypto on the back end will be far superior than the products that exist today. On a cost basis, on a unit economic basis, on a just operational efficiency basis. And I think banks already understand that, like the BlackRocks of the world understand that. Stripes of the world already understand that. That's why they went and bought Bridge to really enter in the stablecoin orchestration market. It's a matter of time. Like Robinhoods of the world already understand this, like tokenizing stocks. We're getting there. I just think we're at Inversion, we're just focused on just accelerating that. And I'd be happy for the people on this playbook too.
Santi, thank you for coming. I feel this is a full circle moment, and it came to my mind the approach David Ogilvy had with his account executives. He did some advertising for an oil company, and he said the account executive, go work there for 6 months to understand the product. And you've been working here for, I don't know, 12 years. So, yeah. But it feels like, I mean, we've all have been hyped about stupid coins, about cool coins, and now we understand, or you understand, you come to this full circle moment of users just need better products. They need dollarized accounts. How can I acquire them? So thank you for coming. The thing that you say about how each country is really different, I love this thing of Itaú, the largest bank in Brazil, is thinking of launching a stable coin, and in Mexico we only have one exchange. So those are huge differences. You cannot bucket them in the same bucket. Thank you for coming. Thank you for your time. And you can find Santi. Will put his link in Twitter. Thank you, Kush. And as always, see you next time.
Yeah, thanks, guys. Thanks so much for having me. I hope this was useful. And
This is awesome.
DMs are not open, but you can reach me through maybe one of these two guys.
Yeah.
Let's go, Santi. Great to have you on, man.
Thank you, guys. I appreciate it.